Hey everybody, Christopher K. Smith. It's my FibLines quarterly update for July 5th, 2021. I do these updates once per quarter in connection with the FibLines indicator. So this video should last about 10 minutes. We'll give you a quick intro to FibLines, go over overview of the markets, look at some financial data, economic data, a couple updates to the FibLines indicator, and some picks going forward. And let's dig right into it. So what is FibLines? FibLines is a method of looking at the stock market that has to do with Fibonacci extensions, Fibonacci retracements. So graphically, you take a chart like this. This is a owner of the Snapchat application, social media. You bring up a chart and you come down here and click on this little Fibonacci retracements indicator inside. I think I saw this little percentage sign over here. And you pick two spots on the chart that you think would constitute the top and the bottom of an initial wave, Elliott wave move. Might call it an impulse move. If you pick your lines properly, you'll notice some pretty interesting things is that you tend to get future areas of support and resistance at multiples of this initial move here, dictated by the Fibonacci sequence. Specifically, you get support or resistance at 161% of this initial move, 261% of this initial move. You notice we came up here, we came back and found some support here, 423% of that move, and then above that, what you can't see, the 668 and the 1108. So essentially, this is the Fibonacci sequence, which is numbers found all over nature. And you'll notice that for any two numbers in the sequence, the number is the sum of the prior two values. So 261 is the sum of 161 and 100. 423 is the sum of 261 and 161. You might ask yourself, what does this have to do with the stock market? What does it have to do with anything? Well, it turns out that Fibonacci is all over the financial markets and all over nature. And if you'd like to understand why that is or get a little insight into it, you'll see it exists in nature all the way from the smallest scale down to conch shells all the way up to the spiral nature of the universe. So go up to YouTube and search for Intro to FibLines, and I'll give you a whole intro to that and my theory on why it works and how it works. So what FibLines essentially takes these observations, takes this initial 100% value, and embeds it in an indicator that when it gets applied to the chart, let me remove this drawing right here, and the FibLines indicator, you will notice that those lines are drawn for you automatically. So it's a combination of a technical study, in other words, straight calculation, and also the levels themselves. The levels are actually embedded in the indicator. In other words, for snap, I have a table in here that says this is the 0 line, this is 100% line. So all these lines are drawn for you automatically on about 200 different symbols, all your major symbols, your Dow 30, your NASDAQ 100, etc. So you can see this has some value in terms of dictating future, or identifying future areas of support and resistance, and it's kind of almost mystical sometimes the way it just hits these values and stops and turns around. And it also helps you to keep track of where stocks go as they grow, as they expand, because stocks are, some are like trees, the acorn grows into the mighty oak. So you notice sometimes when a stock breaks a certain level that, it's made a significant move and it's on to its next major move. So that's a quick intro to FibLines. So this is the Fibonacci sequence right here. You got your 100%, 161, 261, 423. And those were sort of the values that were in popular use in the indicator, and then I extended it to the 685 and the 1108. And these are sort of sublines that are drawn at sort of subdivisions of those larger levels based on other Fibonacci values. So you basically divide those regions and you draw lines at other sublines within them, and second, 2 and 3 levels of sublines, I believe. I have just 2 levels of lines shown here. You can actually go into the indicator and change how many levels of lines you want to see, and it will show you up to 4 levels of lines. I'm only showing 3 right here. So that's the way FibLines works, and again, it's available for about 200 different symbols. And here's the Fib levels. So let's take a look at the stock markets. It's certainly been an incredible year so far for the markets. Dow about 16%. And Russell leading the way of about 17%, outperforming both the NASDAQ and the Dow. That's kind of unusual. The NASDAQ's NASDAQ 100 particularly has been outperforming the other indexes for many years now. But you see, not only has it been a pretty good year, it's been a good 2 years and 3 years. So, despite some really sharp sell-offs we've had, which have been very short-lived, the market has done very well, continues to do very well. And it's very interesting to see how it's doing coming out of this, the whole COVID situation that we have right here. So you see 2 of my bigger accounts here also had pretty decent years. Self-directed account of 12%. Main cash account of about 10% so far. And bigger picture overall is about 9% year-to-date net worth. I'm up, and about 192% since 2010. And generally, I'm about 70% in stocks. So if the market's up, 10%, I expect to have about 7%. That's more or less the performance that we're seeing right here. I'm up about three quarters, 65, 67, about 70% of what the general stock market is. So I'm in 70% stocks and the rest bonds. But overall, it's been great. My net worth's up very smartly, and I'm feeling pretty good. Wow, what a difference that the USA has made in terms of the pandemic, Operation Warp Speed, and the vaccinations have just made a huge difference in the economy bouncing back. And during the pandemic, it's been pretty interesting because you think it's been negative for a lot of industries, of course, travel and tourism, restaurants, hotels. But in some ways, it's been good in the sense that household net worth is way up, credit card debt is down, household balance sheets are up, and I'm particularly proud to be from New York State, where New York was the worst state in the United States in terms of COVID infection rates back early in 2020. And thanks to the brains of the people of New York, we're now have the lowest infection rate due to the high rate of vaccinations. So very proud to be in New York. I'm very proud of the way New York handled the COVID crisis. Vaccination rates overall in the U.S. are looking pretty good. The U.S. is the biggest economy in the world, and of course it's only about 5 or 6 from the top in terms of vaccination rates overall. So that's going to help the bounce back in the U.S. economy. Credit card debt declining also, as I mentioned before. So as people were stuck at home and couldn't spend money, what do? They refinanced their mortgage. They paid down debt. So the U.S. households are in a very strong position to have a lot of cash to spend, a lot of pent-up demand out there in terms of future spending. Well, that's all well and good. And here's our balance sheets graph showing you what household balance sheets also doing very well. What's the possible fly in the ointment here? Consumer prices, inflation. We've had the biggest surge of inflation here in almost 10 years, since 2009. And that's obviously not good, and that's going to erode the purchasing power of the dollar. Where are those price increases coming from? Well, energy has really been the biggest one. But it looks like we're finally, I think we saw something like 4% rise in prices year on year, which is well above the Fed's 2% target rate. So the Fed might have to do something to rein in inflation and the economy. All they could really do is raise rates, maybe do a little quantitative tightening. However, with the amount of spending the government has to do just on interest rates alone, in other words, to finance the debt, they really can't afford to raise rates very much. And that's going to keep the juice in the stock market, I think, longer term. Government spending, of course, is up as well, and that's a bit of a negative, although it will be reflected in economic activity also. We saw a huge surge during 2020, and 2021 is also showed, I think, something like between 26 and 30% of GDP is being spent government spending. So overall, there's a lot of positive things going on in the markets, and but some things to be aware of. Inflation and government spending could cause the Fed to have to put the brakes on here at some point. In terms of simple updates for FibLines, again, FibLines is an indicator that has about the values for about 200 popular symbols built in here. Let me go to personal FibLines, and we will find my FibLines symbol. Here's all the different symbols that FibLines has in it. So I'll go through and highlight a couple interesting ones. Let me go to no sorting here. No sorting. Okay. So you can see we have the SPY coming up against a major inflection point here. And just to give you a larger picture in terms of where we are, we had this initial move back here back in the financial crisis of 2009. Here's your 100% line. Here's your 161. Here's your 261. Here's your 423. And here's your 686% line. That means the S&P has gone up 668% of this initial move right here. Obviously a pretty big move. And you see, so I expect we're going to cool off here and slow down a little bit, but you see if we go all the way up to 1185, we go all the way up to 665 on the S&P. So that's just one small example here. IWM has been a pretty interesting chart as well. We saw that swoon we had back here in 2016. We had a 100%, 161, 261, 423. sold all the way back here, and I think with the first Trump sell-off, came back here to the 423, and then we had our second sell-off back here with COVID back in early 2020. We came all the way back to 1% line. Now we've taken that move and essentially doubled it up here. So very interesting action in the IWM. Okay, interesting symbols to look at here. Nothing really too interesting here. A couple big surprises. Restoration Hardware really I thought this was like a sleepy retailer. Man, completely blew the doors here off to the upside. I had to readjust that one. And another symbol that I regret having missed, despite I saw it go by year after year, was MSCI, which is a financial index provider. This thing has just been a monster. I can't believe I missed it. But that's also up here to 686 line. And, you know, normally when things get to the 423 line, which would be right here, expect them to sort of take a break, but this is just a monster. Kept on going all the way up here to the 686. 1108 target here would be 874 on MSCI Barra, which is a provider of financial indexes. Too bad I missed that one. Snap we already looked at. MRNA, Moderna, was an addition in this version of FibLines as it joined the NASDAQ 100. I got that symbol wrong several times until I realized it's mRNA, as in messenger RNA, which is their key technology, which also key technology behind the COVID vaccine. Prior to that, vaccines were grown in chicken eggs, and now they're using messenger RNA technology. Another interesting company in that space is CRISPR. Amazing technology, gene editing technology. CRSP is also a FibLines symbol, CRISPR Therapeutics. A little bit on the speculative side, but yeah, an amazing company. Obviously losing money here, hand over fist, but incredible company, incredible technology anyway. Moderna, MRVL, Match.com. One interesting thing to find out about being a FibLines subscriber is you keep up with what's in the NASDAQ, NASDAQ 100, which is a capitalization-based index. They just need to add a stock once it gets to a certain capitalization, non-financials in the NASDAQ 100. There's that Match.com, very interesting company. They have all kinds of social media, dating-related sites, Tinder, Match, Cupid, Hinge, Pairs, Plenty of Fish, Our Time, which is the dating site for older people, all part of Match.com. Interesting company and making tons of money too by the looks of things. What else? Okay, PDT, Peloton. Don't really love Peloton, but it's been a pretty good performer in the COVID. Some of my past picks, you know, in a market like this, pretty much everything has gone up, so it's tough to buy everything when it just keeps going up, up, up. So with COVID, I made a couple decent calls here. It turned out pretty well. One of them was General Electric GE. I picked some of that up down in the 7-8 area. It's right here to the top. It's 100% line, so it's probably going to do to take a break. Another one was NCL, Norwegian Cruise Lines. Picked up some of this here in the mid-20 area, doing pretty well on that. Also coming up to it's coming up to its zero line, so I believe this one has a long way to go. I think the first cruise ships just sailed recently from Florida, so that's certainly good news for the cruise industry. And I do expect Norwegian's going to make it all the way back here, but it's just going to take a while, so be patient. DraftKings, I've been a fan of DraftKings for a while. Hasn't really performed all that great. Came up here, took out the 161 line, which is usually a good sign it's going to keep going, and then came back and sold off here. So not really making money in a convincing way yet. But well, the sales are certainly looking good, but the earnings are not quite keeping pace here. So still like DraftKings, still sticking with it in small amounts. Twitter, earlier in the year I was buying stocks, making new all-time highs, which I like to do, but sometimes you can really top tick things, and I really top ticked Twitter in the worst possible way. Got all the way up here to the 423 line, and I just wasn't paying attention. And rather than buying stock, I sold a put here, and I got assigned. I sold another put down here. Stock sold all the way back from 80 down to 50, and I was like, ouch. But I held on to it, so I think Twitter's going to come back, and it's really underperformed compared to other social media companies, particularly Facebook. It's really been on fire lately. So I'm sticking with Twitter. I don't love the service of the company, but I do like the stock, and it's going to get back there to the 80s. Bitcoin, boy, I took a hit here on Bitcoin. As I mentioned in the last quarterly update, I kind of dipped my toe into it first on Coinbase, bought about $1,800 worth, quickly went up to $2,100, patted myself on the back and sold it. and then kept rallying away from me, got up to 60,000, about $6,000 worth. Boom, slammed me down. I'm down about 30, actually almost 50% on that position. But I'm sticking with it. It's relatively small compared to larger pictures, so I'm sticking with it. Coinbase has been an IPO in that space in the last quarter, and it's been a complete stinker. Look at this. I mean, down like 380 all the way down to like 200. So not buying that one, not touching that one with a 10-foot pole, but I'm holding on to Bitcoin. I think the lesson learned there was I should have dollar cost averages into Bitcoin rather than going as big as I did. Again, it was relatively small, just it's a very small percentage of my net worth there I put in there, so didn't get hit too bad. But that's the only thing I really did completely terrible this year, other than Twitter, was Bitcoin. I really top ticked that, and I should have dollar cost averaged. Okay, IPO picks for 2021. I went in and looked at the IPOs, sorted them by performance so far, come up with a couple interesting ones for 2021. Not necessarily FibLines symbols yet, but we have DOCN, DigitalOcean, cloud software provider for small companies. Looks pretty promising here. An analyzed tab. No earnings yet, but there's definitely sales. Sales growth looking pretty strong. And no cash flow either, but cloud computing company, and looks pretty promising. Chart looks pretty good, and it is a 2021 IPO. DigitalOcean, DOCN. That's a daily chart. Had a new all-time high. I like that. Double Verify, advertising software company, DV. Also a 2021 IPO, making money. Actually has earnings, has pretty good revenue growth rate. And this is advertising software, digital media, and analytics based in New York City. Stock's close to a high. I like that. And last one would be Too Simple, TSP, which is Autonomous Vehicle Delivery Networks, believe it or not. Autonomous Vehicle Delivery. So it's networks of trucks that they set up that basically move freight from one location to the other. Losing money at this point. Revenue not so good, but pretty convincing looking chart. I like the way the chart looks. And if I go to daily, this is actually misleading because it came public right about here, and this data seems to be from 2011. Went from 2011 all the way to like 2021, so I think this was a different company down here. But yeah, Too Simple, I like it. Obviously not making money yet, but they could get acquired by a company like Federal Express or UPS, which I have a large position in UPS. So that's it. That's my quarterly update. It's been a great market. It's been a great year. Net worth's doing well. I can't complain. Be prepared for a pullback, particularly in the fourth quarter, and keep on making the money, keep on dollar cost averaging, doing all the right stuff. You're going to do great. If you're interested in the FibLines indicator, you can get it at the FibTools sales store, fibtools.sells.com for $99, and that's 4 quarterly subscriptions. So 1 year subscription, I should say, 4 quarterly updates. Once per quarter, I'll provide you with the indicator and this video, and the indicator includes the values for the Dow 30, NASDAQ 100, and a bunch of other interesting stocks that I think are interesting, and what I find, and also includes the select sector spiders, some futures, the dollar index, gold. It's pretty much all in there. All the major asset classes are in there. Bonds, and you have FibLines levels, and my competition charges many, many times more than I do. So $99 is a pretty reasonable price for this. And you can get that on the FibToolsSells.com or FibTools.sells.com. Thanks for watching. Have a great second half of 2021. Good health, prosperity, and we'll see you next time.